This will completely change your trading. I will show you how you can maximize your profits in trading, keeping your losers very small and letting your winners run. Yo, what's up guys, this is Singh from Fearless Traders, and today I want to show you guys the correct way to scale in. This will allow you to size up while keeping the same risk. Let's dive into the video. Let's take a look at this drawing and understand how you scale in the right way. So here we can see that we have buy side over here and sell side over here. Market comes up, taps this higher time for imbalance, and gives us a market structure shift with a fair value gap here. So now there are two ways to trade this, right? The typical way is to take an entry. Let's say if this is your fair value gap, take an entry here, put your stop above the high, and target sell side, right? And let's say I go in with 3 contracts. So I'm making about 3,000, but I'm also risking 1,000. So it's not bad risk to reward, but let me show you guys how you can do this even better, maximizing your winners. So what you can do instead is, instead of taking 3 cons here, you can take 1 contract. You're risking 370 and you're making 965, right? You'll put your stop above the high and then you wait for a displacement down. Once you get this displacement down, now I'm even more confident that we're going to the sell side. So now there's probably another fair value gap, order block, or anything you want to enter off of. So now I will take another entry here on this fair value gap, put my stop above this high, and my target is still the same. And now my average fill is gonna be half of my first entry and my second entry. So if my first entry was here, second entry was here, half of that. So now this will be my average entry, or my average fill you can say. So now I'm in with 2 contracts. I'm risking 340 and I'm now making 1,700. So I'm risking the same but making double the amount. Now after seeing this displacement here again, I'm even more confident that we're going to this low. So I'm going to look to add another contract. So let's say there's a fair value gap here. I put my stop loss right above this high, and let's calculate our average fill. So I'll take it from here, half point. So my average fill will be right here and my stop loss is right there. So now this is a risk-free trade. And if we calculate this with 3 contracts, I'm making 2,200, risking only 135. Isn't that crazy? Now we're not done yet. So let's say market comes back up, sweeps this high, displaces down, leaves a fair value gap here. I'm gonna enter another contract here, put my stop about right here, and my average fill will now be at right here. Again, this is a risk-free trade now. Stop loss is literally in profit now, and I'm still making the same amount of money, even more now. So if I'm in 4 contracts, now I'm making $2,600, risking basically $0. This is the right way to scale in, reducing your risk. Eventually your trade will become risk-free and you're still making more money. So now let's dive into some examples on the chart and let me show you guys some execution. Alright, so for the first example here, let's say we just took out some sell side here, right? So there was sell side here, we took it out, we displaced right above, created a fair value gap here, and I'm looking to take entry targeting this fair value gap up here. So again, you have 2 methods to enter. You can enter 3 contracts here, put your stop right here, targeting this fair value gap. You're risking $800 to make $2,600, right? But now, if we try to use the scale in method, let's see what we can do. So your first entry will be here, stop loss here, still targeting the fair value gap. So I'll go in 1 contract, right? I'm risking 260 to make 870. All right. We get displacement up, create another fair value gap here, tap the order block, and this is where I'll take my second entry. Now my stop loss will be below this low here, and my average fill will be at, let's see, so half of this. So now my fill will be right here, still targeting fair value gap. And now I'm in 2 contracts, risking even less, 220. First it was like 260. Now risking even less, but making almost $1,600. So let's keep on going here. Let me move this to a side. All right, we got another displacement up, fair value gap. I take my entry here, put my stop below this low now, still targeting a fair value gap. And my average fill will be half of my first entry and my third entry. So right about here. Right, let me try that again. Here to here, yep. And now I'm in 3 contracts. So let's calculate this. Wait, did I do something wrong? Okay, I think I selected the wrong one there. Alright, so now I'm risking $100 to make $2,100. This is how powerful scaling in is. Risking $100 to make $2,100. But we're not done yet. Let's keep on going. Alright, we got displacement here. Boom, what do we do here? Another fair value gap, order block. Take my 4th entry here. Stop. Below this low. Still targeting the fair value gap. Now my average fill will be my first entry and my 4th entry, half of that. So my entry would be here. Hold on 1 second. Okay, so if the market is over here, I'm not gonna let it come back down here. It doesn't have a reason to come back all the way down here, right? So I'll put my stop loss at break even and still targeting the same PT. Now I'm in with 4 contracts, risking $20 and making almost $2,400. So originally I was risking $800 to make $2,600. Now I'm risking $0 to make $2,400, and my max risk at one point was about $250, guys, and I'm making about $2,500 on this trade. This is how powerful scaling in is, and it completely changed trading for me. Alright, so for the second example here, we can see that NQ swept this outside. We get a displacement up, create this 1 minute fair value gap here. So again, we have 2 methods to trade this. I can either take an entry here, put my stop here. Let's say we're targeting this high. With 3 contracts, I'll be making about $2,400, risking about $1,100. So you can either do that, or you can enter here, right? Same stop loss, same target. And I'm entering 1 contract here. My risk is $300 instead of $1,100, making $800. And now I wait for displacement. We get the displacement up, another 1 minute fair value gap, and this auto block respect. So I add here, and my average fill will be from my first entry to my second entry, half of that. So my average will be right here. I'll move my stop here, still targeting the high. And now I'm in with 2 contracts, risking $270, making $1,400. And then I'll try to add 1 more contract, so we get this fair value gap here, auto block. Again, entering here again, putting my stop below the low, still targeting the high. And hold up, I actually need to calculate my average fill here. So from this entry to this entry, my average fill will be right here. So now I'll just put my stop at break even. So now I'm risking basically nothing and making about $1,900. So my original entry here, I was risking about $900, making $2,400. And if you scale in, you're making $2,000 or $1,900, risking basically nothing. So yeah guys, this is how you scale in the right way, maximizing your winners, keeping your losers very small. And once I learned this, it completely changed my trading. Alright, that's it for this video. Please do subscribe and like. I want to hit 100 subscribers before 2024, so please help me reach that goal. And I have a free Discord, link is in the description. So yeah guys, that's it for this video. I'll see you guys in the next one. Peace.